Hello there, this is the Bookkeeping Master on YouTube. Welcome to part 5 of this Learn Management Accounts series. In previous videos, I have covered the profit and loss statement, the balance sheet, what management accounts are, how to compile management accounts. If you've joined the series here, go back and start from the beginning. In this video, I'm going to teach you all about aged debtors reports and aged creditors reports. Let's jump right in. Aged debtors reports sometimes are referred to as accounts receivables report. So the aged debtors report can also be called the accounts receivables report. Aged creditors report can be called or named the accounts payables report. So you might know them by those names rather than aged debtors and aged creditors. What do they actually show? The aged debtors report details all outstanding invoices with our customers. In other words, it details what our trade debtors owe. Our trade debtors are the customers that a company, business invoices on credit terms, payment terms. Any of those invoices which are outstanding, so outstanding sales invoices, will show on the aged debtors report. The report shows what customers owe the entity. On the flip side, the aged creditors report shows all the invoices the entity owes its suppliers. So all outstanding invoices with trade creditors. Trade creditors are suppliers that invoice the entity, the company, the business, on credit terms. Trade debtors are customers that the business, company, entity invoices on credit terms. Okay, so what is the difference between the balance sheet and aged debtors and creditors? Because the aged debtors shows what is owed to the entity, aged creditors shows what is owed from the entity, but wasn't that what the balance sheet showed? If you refer back to the previous video, I said the balance sheet shows what an entity owns and owes. The balance sheet, however, showed all debts, all assets, all liabilities. So not just the balances with trade debtors and trade creditors, but it also showed loans, finance agreements, equipment owned by the entity, motor vehicles owned by the entity, property. It showed everything the company owns and owes. The aged debtors and aged creditors just show what is owned or owed between customers and suppliers, trade debtors and trade creditors. Any questions? Use the comment section below. This may make more sense as the video goes on. So an aged debtors report may look something like this. So we have the name of the company, aged debtors, and the date. This date is important. In previous videos, the date of the financial report has always been the last date of the reporting period. Let me explain. If we were doing management accounts for the first quarter of this year, so January, February, March, the profit and loss, the balance sheet, would be dated 31st of March, the last date of that reporting period. However, aged debtors and aged creditors are different. And that is, if we were to date this 31st of March, but it's now currently 23rd of May, that's the date that I'm making this video, these balances are not going to be correct. So generally, aged debtors and aged creditors are reported in real time or closest to real time that we can get. Because the whole point of this aged debtors report is to show what customers owe the entity. Okay, so we have our customers here, what is currently outstanding and what is overdue. This report is of no use whatsoever if it shows these balances 2 months ago, because some of these balances may be paid by now and other invoices would have been raised in that time, so these balances would have changed quite drastically. So generally, the aged debtors and aged creditors report, even though they might be included in a set of management accounts or January to March, they could be dated 23rd of May because that's today's date. Once again, if this is not making any sense, use the comment section below and I'll try my best to help you. So what do we have here? We have a list of customers. So Angel, Boom, Clio's, Delta Fire, Echo Base, Farplane, Geno's. These are all just made up imaginary customers. And we have a column here for current. So these are the sales invoices which are owed to the entity but are within payment terms. Okay, so they're not overdue. So Angel X has £5,000 of sales invoices which are currently within payment terms. If the payment terms are 30 days, then this is within that 30-day payment period, that grace period. We have Clio's, if they're 15 days, this amount of money, 25,000 euros, pounds, dollars, is within that 15 days payment terms. Anything that's overdue is over those payment terms. So Clio's has £25,000 worth of invoices within payment terms and £5,000 or dollars, euros, which is overdue. So why is this important? Well, it highlights those balances that we should be chasing, balances that need paying into the company's bank account. Okay, so it's a quick way to see what is owed to the company, the business, and what is overdue, what is a priority to get in. It could also highlight massive amounts, such as Clio's. If their balance in the past has only been 10,000 and they're currently at 30,000, 25,000 is current, 5,000 is overdue, it could highlight potential errors, potential errors, but potential risks. So Clio's here, we could have a problem. Okay, this could be running up to a bad debt. It could be unmanageable. Okay, so we can highlight potential risks. Now, this is a very simplified aged debtors report. You could have another column that shows the balance of the accounts. That would be both these columns added together, current and overdue. You could have multiple overdue columns showing balances which are 10 days overdue, 20 days overdue, 30 days overdue. So you have even more detail then of how overdue these debts are. You could have a column that's 60 days overdue, and anything in there is obviously going to be a real priority. You've got a real problem on your hands potentially. Aged creditors. It's the same report but for suppliers. So once again, we have the whole date scenario. This would be dated as close to today's date as possible. We have a column for suppliers. Once again, these are all fictitious. Axel, Bart, Cleaners, Damon's, EasyG, Fixing Cars, Giant C. With the current balances, so these are the balances we owe these suppliers, which are within payment terms. We don't necessarily have to pay these yet. So Bart X, we have 2,000 currently, nothing overdue, so we don't really have to make a payment to them if we didn't want to. Whereas Axel B, the balance in the account is £5,000 overall, and it's overdue, so this really needs to be paid. If we look at Giant C, we owe over $12,000, euros, pounds. It's overdue, we need to get that paid. Okay, hopefully this is making sense. If not, leave a question in the comment section below. Here we go. Let's create an age debtors and age creditors report. So we need a heading. So with the company name up here and the date, we can merge and center these cells here, C to G, to create a title. We can call this age debtors. It's already showing as bold and underlined. You can do that here. Okay, so it's quite simple. We just need to create a column here for our customers. We can underline that. We can create, how many got? 1, 2, 3. Okay, so we could create perhaps a balance column. Underline that. Go over here, and we can do current. Underline that. Move over to H, and we could do overdue. Now, if you were to run one of these reports using accounting software, it would do it at a click of a button, but it would also likely be a lot more detailed than this. Like I said earlier, it may have multiple columns for overdue to really break down how overdue those debts are. So you'd have your customers listed here. So say customer 1, and then I can click and drag this. So potentially got 22 customers here. Obviously we could go even further down if we wanted to. The balance on their account, we're going to use a formula for this. Just do equals the current balance plus the overdue balance will give us the balance on the account. And once again, we can just drag that down to duplicate that formula going down. And then these balances would be entered. So customer 1, we had 5,000 current and 15,000 overdue. You can see the balance is 20,000. So you can go through and enter these. And I'm just making this up as I go. So you'd go down and just enter this information. Like so. Age creditors report is going to be exactly the same thing. So let's call this the age debtors and sheet 2 the age creditors. And then I can just copy this, paste it to this tab. We can call this the age creditors, and instead of customer we can call it supplier. So supplier 1. So hopefully this report is now making more sense now that I'm creating it with you. So age creditors. Okay, and obviously these balances are going to be different because these are for suppliers. So this could be 3,100, 2,000, 0, 0, 1,200, 50, 150, 150, 800, 0, 2,500, 150, 12,500, 0. And obviously you would go down, and then this would be included in the management accounts. So whoever's reviewing the management accounts can quickly see what is owed to the trade creditors, to the suppliers, what is overdue. The same with the trade debtors. We can see what our customers owe and which debts are overdue. As mentioned earlier, it's also a great way to highlight risks. You know, this customer could be a risk. It could be we highlight them in red and try and point it out in the management accounts. Their balance is at a historic high, and 15,000 of it, so 75% of it, is overdue. They haven't paid us within terms. So that could be a real priority debt to chase and get the money in. Okay, thanks again for watching. There's one video left of this series, part 6. I'll speak to you in that video.